You've seen them everywhere, right? Commission-free trading apps. They've totally changed the game, opening up the stock market for millions of people. But have you ever stopped to wonder how free is actually, well, free? In this explainer, we're going to pull back the curtain and find out the real price of those free trades.
This quote right here. This is at the very heart of our story today. I know, it sounds a little mysterious, maybe even a little ominous, but stick with me, because by the end of this, you're going to understand exactly what this means for modern stock trading. And let's be super clear, this was a huge deal. I mean, for decades, if you wanted to buy or sell a stock, you had to pay a broker a fee, a commission, and that was a real barrier for a lot of folks. Then, apps like Robinhood came along and just tore that barrier right down. It was, no exaggeration, revolutionary. But that brings us to the big, obvious question, doesn't it? It just doesn't sound right. A coffee shop can't give away free coffee forever and expect to stay in business, so how on earth does a trading company give away free trades and grow into a massive corporation? There's gotta be a business model hiding in there somewhere. So, to solve this little mystery, we're gonna play detective. We're gonna follow your trade order, right from the second you smash that buy button on your phone to the moment the shares actually show up in your account. And let me tell you, the journey it takes is probably not what you're expecting.
Okay, so here's the secret path. You hit buy, right? But your order doesn't just go straight to the New York Stock Exchange. Nope. Instead, your broker takes your order and routes it to a special kind of company called a market maker. And here's the kicker. That market maker actually pays your broker for your trade. That little detour, that's where the magic happens.
So, who are these market makers? Just think of them as the wholesalers of the stock market. They are these massive, high-speed trading giants whose whole job is to always be ready to buy what you're selling or sell what you're buying. They're like the essential plumbing of the financial system, and they are a very key player in our story. And this right here, this brings us to the main event. That payment, the one from the market maker to your broker. It has a name, Payment for Order Flow. You'll often see it called PFOF. This is the engine that powers the entire commission-free model. Which, of course, begs the question, why are they paying for it in the first place?
So why is your trade order so valuable? Well, market makers profit from something called the bid-ask spread. It's just the tiny difference between the price they're willing to buy a stock for and the price they'll sell it for. By getting a massive river of orders from regular investors like us, they can scoop up that tiny profit over and over and over again. Now, for your broker, the payment for your one trade is like a tiny drop of water. We're talking fractions of a penny. But as you can see, when you get millions of those drops from millions of users, you get a fire hose of revenue. That's the power of scale.
Okay, so we get it. Market makers pay for the orders because they can make a tiny profit on the spread. And we know all those tiny payments add up for brokers. But just how important is this hidden engine to a company like, say, Robinhood? Is it a side business? A nice little bonus? 64%. Yeah, let that sink in for a second. In 2022, nearly 2/3 of Robinhood's entire revenue came from payment for order flow. Not 10%, not 30, 64. So when you look at it like this, you realize payment for order flow isn't just part of the business model. For all intents and purposes, it is the business model. Everything else is secondary. This is the financial machine that makes that whole commission-free promise possible. So here's the crucial takeaway. The service isn't free because the company is just feeling generous. It's free for you because other, much larger financial firms are paying for access to your trades. Your order flow is the commodity that's being bought and sold. And that, right there, is this central trade-off. On one hand, you have this incredible, powerful promise, opening up the world of investing to literally everyone, no matter how much money you have. But on the other hand, you have the hidden model that powers it all. A model where the user's trading activity becomes the actual product. And so we end up right back where we started, but now you see the whole picture. There might not be a commission, but there is a price. The entire system is built on selling your order flow. So now that you know how the sausage is made, the final question is really for you to decide, is commission-free truly free?
Subscribe and like. You may share too. Top our next video to learn more.